concept?
It was how to trade in a downturn, I think.
Okay, so we've gone over market sell-offs, right? Market sell-off strategy.
That's what it was. You ended a little early.
Okay, did we do the market sell-off strategy?
Yes, we did.
We did it. Okay. All right. Let me see here. I'm gonna share my screen here. And how's trading been going for you since then?
Okay. I think I came to a realization the other day. I think all my other trades I was trying to go long. I think I was trying to like bottom pick, but then I remember just looking when they said, the S&P is below the 200, it's below the 50, and it's below the 9.
Right.
Why am I trying to go long? And I think the day you picked up that Nvidia trade, I was short about a couple hours before you. I put on a trade short, and so it's been working out okay.
Okay, good.
And I think I was fighting the trend, and I just came to the realization, why am I doing that?
Yeah, you hadn't at that point you hadn't taken any shorts, had you?
I mean, I do take. I'm not opposed to it, but usually I take in. I do the same thing you do. I buy the inverse ETFs. I'll buy. But no, when in the entire market downturn and like starting October, I did take some shorts. I shorted Etsy and I shorted like one or two other things, and those are the trades that actually worked out pretty good for me. I went out of them early, not taking the entire profit position because I thought the market was turning, which was stupid. All the technicals were saying stay in the trade, but I didn't.
Yeah, so basically I'm filtering out your trader view since 10/8, which is basically when the downtrend started. And looks like you're shorting a lot more recently.
Yeah.
Yeah, hold on, let's see here.
Yeah, I think I told you that I did a couple shorts and I went back and looked at them. They were working, but I got out too early. And I don't know. I mean, I think I did that because of FOMO or something.
Long. You did short on the 25th, and then you started shorting a lot more recently. All right. Let's look at the stats on more of a macro level here. So it's filtered out from basically when the market turned in early October. You've taken 26 trades.
Okay.
Risk reward is skewed. This is not the way you want it to be. So your average win has been 165. Average loss has been 170. So about the same, 1-to-1. Your loss is actually a little more, but basically 1-to-1, right?
Right.
That's not the way you want to be trading. If your average losers are 170, your average wins, I mean, if you're thinking 2-to-1, they should be 340, but even 250 to 300 would be fine. You definitely do not want to be trading at a 1-to-1 clip. Okay?
Yeah.
So that would be an improvement to make. And if you're basically trading break even right now, down about 396. Your win rate is about 50%, 46. Like a 46% win rate, I know it doesn't sound good being below 50. That's fine if your risk reward is the way it should be. Okay? So that's something, I think the risk is something you've really got to fix in here. Are you thinking about that when you're making your trades?
So let me see if I can explain it to you. By risk, you mean you want to take about 1% of your total equity, and if your position drops that amount, that's where your stop loss is?
Yes.
Okay, yes. I understand the concept, but I'm trading so small right now that I feel like if I did that, I would get shaken out of positions, even though I will, but I make it a little bit larger.
Okay. Well, you have to have some kind of normal risk, whatever it is. So what size is your account again?
2,000 right now.
Oh, 2,000. Okay.
So 1% is $20.
Well, you can't do 1%.
So I do around $100.
Okay. If you're doing 100, well, your average loser is 170. And for a $2,000 account, that $70 per trade is huge. So, $100, I mean, if you're going to up the risk, then you up the risk. Obviously, there's more chance of risk of ruin when it's only $2,000 and you're risking 100.
Yeah.
But if that's the decision you've made, that's fine. $100. The key is now your wins have to be bigger than that. So if you're risking 100, your wins need to be coming in 175 to 250, somewhere in there.
Okay.
Okay. So you have to plan that trade out. And if it doesn't look like you can get that kind of win off this risk, you don't take the trade.
Okay. So currently in the trade I'm in, can you just pull up a line, ALGN?
Okay.
So I went short that day, the same day you shorted Nvidia.
Is that
At
about right here?
221, I went short. And it's been, I mean, the trade's been only open for 3 days, right? So
let's plan the trade. Let's go back to that day, ALGN, and let's talk about the way this trade should be planned. Okay, this is the day you entered, right? On this red candle here?
Yes.
Okay.
I waited till it was below the 9. It was a strong down day across the board, and I shorted that day.
Okay. First of all, this is a good setup. Your market analysis is on point. It's setting up. It looks a lot like the Nvidia trade, right?
Right. It's the same. I mean, so just to give you some background, I set up my relative weakness list. It was Nvidia, Align, Square, all stocks that haven't been doing well recently.
Okay.
I picked Align because the chart looks bad, and recently when it tried to fill the gap, it failed.
Okay.
And it failed over the 9. It failed the gap. So I thought when it went below the 9, I wanted to short it.
Okay, good. So first of all, entry is really good. Even if you end up losing on this trade, remember in the questionnaire we talked about process versus results.
Yeah.
You're doing the right thing. So even if you lose on the trade, you know you traded it correctly. Okay.
Yeah, I mean, I don't even care if I lose on the trade. For once, I technically did the right thing. I'm happy.
Exactly, and you're not going to win on all these, but you're doing, at least with the entry setup, is exactly what you should be doing. Okay, now let's talk about it. I don't want to know yet what you did. Let's just plan it out together as if we don't know how you traded it. Okay.
Okay.
We know you have a $2,000 account. We know you're risking $100 per trade. So let's think about the logic behind how we have to manage risk and manage the trade itself. Okay. So you entered at 221, you said?
Yeah.
Okay. So let's just say 221. Now, there's a couple of things to think about in terms of where we want to place our stop. We definitely want it to be above the 9, right?
Right.
And then here we have to make the decision, do we want to loosen it even more to get it above this range, or do we want to keep it above the 9? I would say probably if it starts to get up here, your trade has already failed because it's breaking the 9 and coming back up. So I don't think you have to go all the way to 238. I would say you need to give it a little room above the 9. So I would say a good spot would be somewhere here around, say, 232.
Okay, that's
231.
Perfect. I was at 251.
Fantastic. Okay, so
okay, go ahead.
Okay, so basically we're risking 10 points, right? Your entry is 221, you've gone 231, you're risking 10 points. Now we're risking 10 points. That means how many points do you need to get a good win out of this trade?
20.
20, right?
Yeah.
So if you entered at 221, before looking at where it's logical, you need to get down to 201, right? Yeah. To make this a viable trade for you.
Yeah.
And 201 would be right here, and that definitely is viable. I mean, you could go all the way down here to about 190 and it still makes sense, right? You've got the round number 200. Oftentimes they bounce around that. So I think 201 is a better spot because sometimes they do just bounce at these round numbers. So I would say this is planned out perfectly. You've risked 10 points to win 20. So that means you can get 10 shares of this. right?
Yeah.
Is that how much you did?
No, I think I did more.
Okay.
I was trading with margin. So
Margin is fine, but um, your
yeah, no,
risk has to remain on the amount of money you have.
yeah, no,
So
it's the same with my stop at 230. It was a little over $100.
how many shares do you have?
Let me check. Hold on. Is it bad that I don't know offhand?
As long as you did it right, it doesn't matter what you remember.
Okay, hold on.
Yeah, we don't. Memory doesn't make us money, but as long as you planned it right, got in, managed your risk properly, you're good. I hope
18.
you didn't. 18, that's too much. Okay. So basically, you're risking $180. All right. If you lose on this trade, you've gone down from 2,000 to almost 1,800 in your account. That's too much for one trade. If you keep doing this, you lose 5 trades, you're down to $1,000. So 100 has to be your max, because even 100 is on the high side of risk, but we're allowing that because you're willing to take on a little more, right?
Yeah.
But that was too big a position size.
Okay.
So you should have been at 10 shares. If I know it doesn't sound like a lot, and maybe you just, you're like 10 shares, but think about what you're doing. You're risking 100 to win 200. You'd still win 200 if you hit your target, right?
Right.
So you'd be good, and you just keep doing that, and slowly it's going to grow. At 180, the chance of risk of ruin is just too big. Risking $180. So now, if you win, you are going to win 360, right?
Yeah, that was about my goal.
Okay, so I would say your plan, your entry, your setup, your market analysis, all good. Okay.
Oh my God, that's great to hear.
Yeah, that's fantastic. All good. Your trade management, all good. So when I analyze the trade, I break it down into 3 parts. One is the setup and entry. One is the trade management, and the trade management we actually won't know till the end because it's also sticking to the plan, right?
Yeah.
But if you manage it this way, the way you have planned, and you either get stopped out or you hit your target, it's good. So you'd get an A for that, A for entry. Your risk was good in the sense that you planned the 2-to-1. So that part of it is good. Okay.
Yeah.
So you did it exactly right. Where you got in, you placed your stop at the right spot, you placed your target at the right spot, you're getting 2-to-1. Fantastic. The big error, the error that blows up accounts or leads to huge drawdowns, which I think you've had an issue with in the past, is you took on, while your risk analysis was right, you took on way too much risk. You took on almost double the risk you should be taking. That's a huge problem. And I think that's part of the reason your account has dropped, is because you do take on more risk at times. Is that right?
Yeah.
Okay. So that's something you really need to fix. And I know it's frustrating when you want to make it back and get these bigger wins, but you can't lose $180 right now.
Okay.
So that would be, everything was perfect on it except just taking on too much risk.
Okay.
All right. All right. That's the only position you're in right now, right?
Yeah. Yep.
Okay. Okay. Really good. I mean, really good in terms of everything you're doing here, and hopefully you end up winning on it. What you could do now, because if you want to get your risk in line, if you're willing to take on the $180 and not worry about it, that's fine. Since you're below your entry level, you could just take those 8 shares off and get your risk in line if you wanted, because you are at a spot where you could do that. But if you want to keep it on, just keep it on. Okay. All right. Anything else?
I think that's it. I just a kind of a thought I had. So I've been going every day and doing my own, like, the market analysis, looking at all the indexes, seeing where they are in reference to the moving averages. And something I've been watching for the last few months was the IWM. When we first started this downtrend, the IWM is what led the way, right? It started to show weakness way before the other indexes.
Right.
Right. So I felt like, for lack of a better term, it was like a precursor. It kind of like foretold the future, like a couple of days ahead of what was going to happen in the other indexes.
Exactly.
Yesterday, it hit the February low, whereas I think the Qs and the S&P 500 have not hit the February low. I feel like just because now that the IWM has led the way, the Qs and the SPY is definitely going to hit the February low.
We can't talk indefinites. Don't stay away from those kind of terms, just because of the way you phrase things sometimes will guide what you're doing a little too much.
Yeah.
But your analysis is on point. Like, what we're really looking for is we want to see improvement in IWM, right? Yeah. And all those market breadth indicators we talked about, they look pretty weak again. So I would say I have a bias towards SPY and Qs hitting those lows again. And we're not seeing anything right now to change our minds about it. A week ago I did. So are you a member of the Trade Report? I forgot.
Yes.
Yeah. So you heard what I was saying here. When we had run up here, market breadth was actually improving. Hold on for a second. Something popped up. Market breadth was actually improving, but then we failed again. And that failure has led to poor market breadth again. Failing 3 times is not a good thing. And then, these kind of, again, we're seeing today, we'll see how the end changes, but, failing here on, we had strength in the morning, right?
Right.
And we even have a hammer here, which should lead to a bounce. It looks like it might be failing again. If we start to close in here, I definitely think there's good potential for these levels to be hit.
Right.
So your analysis is on point. Just listening to you talk, what you should be doing. And now it's just a matter of putting into practice, making sure your risk is in line, managing the trades. But it seems like everything is kind of coming together. And you see how, like, you have setups, but it all starts with this kind of like market analysis and sector analysis, right?
Right.
So, and it seems like you've got that down.
Yeah.
Okay. I think the key for you is going to be, like, what to do, but you can know exactly what to do. But every once in a while, if you slip up and make these kind of big risk errors, it'll crush you. And I think that's kind of what has happened here.
Yeah.
So just fix that. And you have to be willing to, there are points where you get a little frustrated and maybe you're not trading as well, or you go through a little drawdown. You just have to stick with it. You can't let it, play with your mind and just say, okay, and I'm just, screw it, I'm just going to get big here. You can't do those kind of things.
Right. Okay.
Okay, but your analysis is on point. Let's see what we've gone over here. Have you had any issues with, it doesn't look like it because you just took this one trade, but, we talked about keeping that journal, that emotions journal, right?
Yeah.
Have you been doing that?
Yeah.
More, are you right?
I was doing it before, but not as frequently. Now I'm trying to do it more frequently.
Do you do it every day?
I did like 4 out of 7 days. I'm pushing to try to do it every day.
Okay. Even if it's one sentence, like if you feel like, I don't feel like doing it, or it's going to take me a bunch of time, it could be something as simple as just write a sentence down, just something. And then sometimes when you write that one sentence, it just leads to more. But you should definitely, I think that's, I don't know, I keep harping on it, and it might, be annoying to hear it, but that's your issue. You obviously have the smarts, the understanding. It's just going to be this part of it. So you got to do that every day. Even if you feel like there's nothing, just write something in there. The way you took on the more risk this time. Let me ask you this. So you're supposed to be risking $100 per trade, right?
Yeah.
What and you have a math background, you're an engineer, right? So you know all about math, you know about risk of ruin, you know about all that kind of stuff. So logically, you know all this.
Right.
So why then, when you're only supposed to be risking 100, why did you risk 180?
So I never thought. So I never thought in terms of what am I going to risk on this trade. That's never been my mindset. It's always been
Mhm.
okay. How much is in my account? Let's trade this amount, and then afterward, I would figure out okay, where is my risk supposed to be, and kind of like pencil.
Okay. So that this is going to be a hard and fast rule. Write it in your journal after we talk today. Um, you have to have the trade planned out. Everything about the trade has to be planned out before you ever enter it. So you're not thinking on the fly. You're saying to yourself, I can only risk $100. The way we laid it out, like the way we planned we were kind of going backwards and planning it, right?
Yeah,
The way we said, okay, this is where your stop has to be. This is where your target has to be. This is how many shares you have to take. Now, does the trade make sense? And then you enter the trade. So all that needs to be planned out before you ever enter it. And it's not day trading where you're thinking on the fly. So it's not hard. It's not like everything's moving super fast and you have to make this decision real quick. You have time to do it. So that's going to be a hard and fast rule for you. Don't go over $100 right now with this account size, and have the plan in place before you enter. What I do is, the focus list you see that I have in the morning,
yeah,
of stocks I'm thinking about trading. Even though there might be 10 stocks in there, I'm probably not going to trade them. I still have a loose plan. As I put those stocks on my list, I look at them and I know before I would enter, the evening before, if I do enter this is probably going to be the position sizing. This is going to be around where my risk is. This is where my stop is. And I know beforehand whether I'm going to be able to take that trade or not. So that should all be planned out.
yeah. I've never thought that. So.
Yeah, and the thing is too, if you have that plan in place, it helps with your impulse control, because it's slower now. You're not thinking on the fly. Whereas when you're just jumping in and kind of thinking on the fly, that's where the impulses can come in. Okay, so forcing trades. You're not forcing trades now. You took a great trade and you only took one.
I feel like I've been in this trade for a month.
Right. Yeah, that's the thing. I remember I had a small account too, and I know like I'd see other things I want to trade, but you're kind of stuck with that position that you have to be in.
Yeah. I checked today, and I've only been in this trade for 3 trading days,
and it feels like forever, right?
Yeah, because the funeral was George Bush funeral was on Wednesday, and then, and I was shocked when I looked at it today. So a lot of it is just sitting around doing nothing.
Right. That's what it's going to be right now. The other thing you can do is during this period, take a lot of paper trades, because you're in the learning process too. So I mean, you've got this real trade that you have to keep on, but create yourself a dummy account. You can just do it in a spreadsheet and just trades that you see, just take them.
Yeah, I haven't been doing that as much, but I think I'm going to start actually.
Yeah. One, it gives you something to do. 2, you're learning that way as well, and putting all the stuff we've talked about into practice. Okay, so we've gone now. Have you been keeping your earnings breakout and breakdown lists?
Yeah.
Okay, are you seeing anything set up with those? Have you been taking paper trades?
No. So earnings breakdown and breakouts, I mean, it's the same thing as gap up and gap down, right? Anything that gaps up and gaps down for any reason.
Yeah, it doesn't have to be earnings.
Yeah, so I've been kind of keeping an eye on some of those.
Okay, so this is what I want you to do. I want you to take 2 paper trades every trading day. Okay, and this can be off your earnings breakdown list. It can be off, the market sell-off strategy right now, and it's basically all there's going to be at this point. But force yourself, since I'm making you do this, it's basically just to help your learning curve. But there are going to be days where if you were really trading live money, you wouldn't take any trades, but you're just going to be forced to take these paper trades. So what I want you to do when you take the trade, make a comment next to it, like this is a trade I would have taken, or this is a trade I'm just taking because I'm forced to take one.
Okay, gotcha. A forced trade, or
you would take it.
Now, when I'm paper trading, are these going to be day trades, or should I try the swing trade?
No, these are swing trades. Yeah, we haven't gone over any day trading, have we?
No, you showed me a couple things. You said the concepts are similar, but on a smaller scale.
Uh-huh.
Okay, so if I pick a trade for
Do
3.
you want to? You're watching the Open, right?
Oh yeah, oh yeah.
Do you want to go over a day trading concept today that you can just start watching the Open and start working on?
Okay.
All right,
What did
why
you
don't we do
have?
that?
What did you have for our lesson today?
I was basically going to kind of go off what you wanted to do. So there's nothing we have to do. There's a lot of different things we could do.
Mhm.
But I think the day trading thing will be good because you can just start working on like educating yourself on that and just start practicing it
Okay.
and see because it takes time. Like with the day trading, it takes a good just to get the pattern recognition down and working on it. It takes like a good depending on the person, 2 to 5 months of just watching in the mornings.
Okay.
So that's why don't we do that? What's your background in uh, day trading or watching the Open? Have you done much of it?
Yeah. Uh,
Okay.
Years ago.
And what type of strategy were you using?
Um, Basically the earnings breakdown, like gap down.
Okay. Okay.
I would wait for like a great stock to have like a bad earnings reaction, and wait for it to drop in the morning 10, 12%,
Right.
and take a small position and just wait.
Okay. So this is gonna be a little different, maybe a little similar. How many charts were you watching at one time?
Just one, I think, the minute chart.
And you have TC 2000, right?
No, I have Thinkorswim.
Okay, Thinkorswim. So create yourself a setup like this, like anywhere from 8 to 12 or 14 charts. This is 14 charts here.
Okay.
Okay. Now we're going to be trading a lot of setups in the morning. So just between the gap ups and gap downs, there's about 14 setups.
Mm-hmm.
And then if we go red to greens, green to reds, you're adding another, 4 setups. And if we get into momentum stocks, there's a bunch of other setups. So you're thinking about like 30 or 40 different setups. Okay. On top of that, I'm looking here at 14 charts. All right. So think about that. 14 charts, 30 setups. That's practically humanly impossible to do, right? So we have to have kind of a framework. This is how I do it to kind of slow it down. We have to have a framework of what we're looking for and then be able to gravitate very quickly to those things and then ignore everything else. So even though I know people look at my setup here and they, when they first see it, they might think, wow, this is crazy to be looking at 14 things. But very quickly in the morning, I gravitate towards the things I'm looking at once I see the specific stocks doing what I want to see them do. So that's what this is going to help with. So this is like what I'm going to show you now is a framework of how I'm looking at things in the morning. It's specifically for gap ups. And then gap downs is going to be almost the same, just kind of in reverse, although there will be some nuanced differences. But for now, we'll focus on the gap ups. 7 different setups with these, but very quickly, because we're not thinking of it like setup by setup by setup, which is I think what most people are doing. We're thinking of it as one kind of process. So let's talk about the gappers. We're on one. When you were trading, what charts were you using again? 5 minute or 1 minute?
1 minute.
Okay, good. So that's not gonna be much different. I use the 1 minute as well. So this is the last candle of the previous day. Okay.
Yeah.
Now we have the first candle of the open, and this is a gapper on news. So it's whether it's earnings, whether it's something that came out in the morning, whatever it is, the stock is gapping up 5% or more on heavy volume, pre-market volume.
Yeah.
Okay. Now, when this happens, it's going to go on your list. It's going to go on your chart here. Basically, one of 3 things is generally going to happen. It's either going to run at the open, it's going to consolidate at the open, or it's going to pull into the gap at the open. And you've probably noticed this, right? When you've watched gappers in the morning. For no rhyme or reason, sometimes stocks look great, but they don't run, they consolidate, or they pull into the gap. Pulling into the gap is fine too, because someone might have bought here at 80 and now the thing's at 95 and they're just taking profits, right? So this is all fine. Well, let me go over the first also. Are you familiar with the VWAP?
Not really. I know what it
Okay,
is.
yeah,
But I
the
don't.
VWAP is the volume weighted moving average. Um, and that's going to be important on your chart. So you're going to have that on the chart. And also, so if we pull up, let's just pull up Netflix here today. This orange line is the VWAP. This yellow line is the 9 EMA. So these are the two indicators I have on my chart. Okay.
Yeah, but I have a question. So on the daily chart, is the 9 EMA the same as on the minute chart?
No, it takes the period that you're looking at.
So it
So
automatically adjusts to what you're doing.
yeah, the VWAP doesn't change, but the EMAs and the MAs, they change according to the chart you're looking at. So whether you're on the 5 minute, the 1 minute, the daily, they're going to be different.
So the 9 EMA on a daily chart, it's the 9-day exponential moving average. So on a minute chart,
No, it's not the 9-day, it's the 9 period. They do it by period. So if you're looking at dailies, then it becomes the daily. If you're looking at the 1 minutes, it's going off the 1 minute. If you're looking at the 5 minutes, it's going off the 5 minutes.
Okay, so
it's period. It's period.
Gotcha. Okay.
Okay. So you're going to have a 9 EMA, you're going to have a VWAP. Now, what we're trying to identify at the beginning of the move is what is it doing? Basically, is it doing this? Is it doing this? Is it doing this? Okay. Running, pulling, consolidating, or pulling into the gap. If I see a stock that is running at the open, I'm going to label that a 1. Okay. If I see a stock that is consolidating at the open, I'm going to label it a 2. And this is just kind of a labeling system to help me very quickly identify what's happening. And then if I see it pulling into the gap, I label it a 3. Okay.
Mm-hmm.
Now, right away, I'm going to discard the other setups when I see one of these things happening. So let's go to the ones first. Let's say you got this stock gapped up at the open, and right away it just starts running. All right. Now I can forget about the 2 and 3. It's a 1 now. Okay. So I'm thinking of it in terms of a 1, and I can really focus in on what it's doing here now. Now, normally when the stock is running like this, the 9 EMA is going to be trailing like this. The VWAP is going to be trailing like that. Okay.
Mm-hmm.
Now, as this thing starts to run, once you start to see a big gap, usually they're going to start off pretty tight, starts to loosen up, and if it hasn't pulled back a lot to the 9 and starts putting in this big gap between the 9 and the price action, VWAP and the price action, at that point, I start looking for a potential reversal play. Very similar to when you think of the earnings breakout runner short. It's very similar to that.
Yeah.
Okay. So start looking for a reversal candle. So as it's running up here, look for something like an inverted, same reversal candle. So you're looking for a reversal candle. Okay. If you get that, we're going to short it. That's what we're going to label as a 1A. That's going to be like the runner short.
Mm-hmm.
Okay.
So
right now,
are there many different types of reversal candle, or basically we're just looking for an inverted?
Basically, the way I think of it, if you actually went down and studied all of them, there's a bunch of them. I look at it, either it's putting in like a big tail or a hammer, or it's putting a bearish engulfing, or that evening star pattern we talk about. And after that, to me, it's just, it when you see it. If you just see an ugly candle, when it's failing.
Okay.
Now, this often happens at round numbers. So watch when it gets to 50 cents, when it gets to $1, if you're at 22.50 or 23, something like that, that's where they often reverse. Later on, I don't want this to get in your head right now because you just have to get the pattern recognition down right now. So we're not even going to talk about where you place your stops, where you put your targets right now. I just want you to watch in the mornings and get the pattern recognition down. But later on, we're going to add bid-ask analysis. Do you look at bid-ask spreads or anything like that much when you're looking at intraday action?
Yeah.
Okay. So we'll look at constriction and expansion of bid-ask spreads, where time and sales are coming in. That'll really help with this as well. But if you're doing that right now, it's going to be too much. First, get the pattern recognition down, and then we'll talk about that. Mm-hmm. But that's what's going to come in the future. So you're looking for a reversal candle, you would short at that point. Okay?
Yeah.
That's the 1A. Now, if it runs but doesn't really put in a good reversal and starts to consolidate, at that point, we start looking for a long, that next run up. Okay? Yeah. So there's two ways to play it. One, when it's pulling back to 9, if it holds a 9, we're going to go long. The other way is if it breaks the high, you can go long. Okay? And that's going to be the one.
These will all be 1 minute candles, right?
Yes.
Okay.
And that's going to be the 1B setup. Some of the people I work with, they like to break this down to 1B and 1C, whether it's a pullback or a break of the high. To me, it doesn't matter. They're both 1Bs, but however you want to do it.
Right.
So basically, off this, you have a long setup and a short setup. Short setup if it puts in a reversal. Long setup if it pulls back and holds or breaks the high. Okay?
Mm-hmm.
So those are the 3 setups you're trading here. Now let's talk about if it consolidates at the open. You know, you probably have heard the term opening range breakout or ORBs. Yeah. That's what this is here. Basically, it forms a range in here, and if it breaks the range to the upside, you're going to go long, and we'll call that a 2A. If it breaks to the downside, you're going to go short, and that's going to be a 2B.
Yeah.
It's as simple as that. Now, again, we're going to use bid and ask spread analysis later, where oftentimes we'll be able to game this before the breakout. So we'll enter right in here. Okay. But we'll talk about that later. Right now, I just want you to be able to see these patterns.
Okay.
Then the final phase of this is if they pull into the gap. The 9 EMA will often be coming in like this time. And look for that spot where it holds the 9 and shows strength. You're going to go long, and we'll call that the 3A.
How does it show strength? A large green candle at the 9?
Just like the pullback setups we trade for earnings breakouts. It looks exactly the same, except they're 1 minute candles, but the formations are the same. Okay? And then if that bounce fails or we break the low, that's the 3B, and we're shorting that. Okay?
Yep.
That's it. That's what I'm doing with gappers in the morning. It's this over and over and over again every single day. So that's what we're looking for.
What is an average like time frame that you're waiting for this break to happen?
It varies. It varies. I want at least 4 or 5 candles. So at least, 3 to 5 minutes. Sometimes you're not putting in your first trade until 15 or 20 minutes later. Sometimes it'll be very quick, like 3, 4, 5 minutes in. It really varies on the day.
So you're sitting there, you're watching the first 3 candles, and then from there, boom, you're getting into
boom. I might be, by the first half hour, I've made mid-10 trades. It really depends on the day. Some days I've made 1 or 2 or maybe none. Some days I've been trading like a maniac. It really depends on what you're seeing. Just kind of go with the flow of what you're seeing.
Okay.
Now, a couple of things here. Now, this isn't in a vacuum. These things will morph into each other, especially when I was talking about, like, sometimes I'll trade a bunch of them within the first 20 minutes. Mm-hmm. These things can morph into each other, okay? So, like, let's say it started out as an ORB, okay? The 2A. Let's say it was consolidating. It broke from here as a 2A, okay? Now it runs, and say like here you got 2.5 to 1 and you're out completely at this point, okay? But now it keeps running, and the 9 is coming like this, and you start to see it gets super extended. Now you're thinking of it as a 1.
Right.
Okay? And then you get that reversal here, and you can short it, okay? Yeah. So now you've traded it as a long here, as a 2A, and then you trade it up here as a 1A. And now let's say it pulls back here, and it holds a 9 and shows strength. 5. Now you can trade it as a 1B, right?
Yeah.
And then maybe later in the day it goes up, and you get traded as a 1A again. So these things aren't like one trade and that's it. They kind of morph into each other.
And you have your button set up where it's like one click will do the buy for you, right?
I don't do that. I don't use shortcuts or anything. I kind of go through. I do it kind of the old school way. I've tried that, and I made a lot of mistakes. So I just go back to.
I'm only asking because how how easy is that to maneuver while all these movements are happening?
There'll be a learning curve in the beginning. It'll be tough, but the more you do it, the better you'll get. That's why it takes time. You know, I was saying it takes 2 to 5 months. All this stuff has to really become second nature to you. So the first step right now for you is don't even worry about trading. Okay. Don't paper trade in a dummy account or anything, or, you know, paper trading account. I just want you actively watching. So tomorrow morning, look for gappers. Hopefully there are some. Obviously, if the market's tanking tomorrow, there's not going to be any. But you can basically do the reverse of this for gap downs. The one of the caveats for the gap downs is I'm more biased to going long because of the SSR rule. Are you familiar with that rule?
No.
Okay, that rule is it's a rule, SEC rule, that if a stock is down 10% or more, it can't be sold on an uptick.
Oh, it's the uptick rule.
Yeah, but yeah, basically the uptick rule. So obviously that makes it a little more biased to the upside, right? That doesn't, because they're trying to protect the stock. So there's this like thing in the market that helps you to go long. That doesn't mean it can't go down, and I still will short, but my tendency is to go long more on those.
I see. Okay.
So, but for now, hopefully we get some gappers in the mornings. In January, we definitely will, because earnings season is about to start. You know, in a month, earnings season is starting again.
That's crazy.
Yeah, it feels like it just started last time. But January, I was just looking at the earnings here. Let's see. Let me just get the dates down so you know when you'll really get to put a lot of time into it. Yeah, starting on the 15th. That's basically when earnings season is going to start. So about a month away. Okay. For the next earnings season. Okay, let me send you a document so you can see this.
So the only indicators you're using during the morning day trading is the 9 and the VWAP?
9 in the VWAP. I don't even have volume on the charts. So you'll see here there's no volume on these either. I found that volume intraday gives you a lot of mixed signals.
Yeah.
It can be just one guy coming in big, and then just craters after that. So just price action.
Okay.
And I do a lot of bid and ask stuff, which I don't trade off level 2, but I do bid and ask. Here's just a better picture of that. What's your email again?
SIBBK. That's me.
Okay, so you have the little drawing here. Let me show you some examples. My 3Bs and 3Bs and 2Bs are on a different computer. I'll give you those later, but let me show you a few examples. Here's TSRI. Oops. TSRI. Notice the pullback into the gap here, right? See how it held them.
You maximize that?
Is that better?
Yeah.
Okay. See how it pulled in the gap here?
Yeah.
And held this level. Technically, you could have traded this as a 2B right here. You see how it broke that range? Then it formed a 3A right here. Pulls into the gap. You see how, just like I drew it, the 9 trails like this.
Yeah.
Showed strength right here, and then boom, right?
Did you get in at that green candle right there?
Yeah, this is where I get in. I didn't trade the 2B, even though it did set up there. But this was the long setup. I traded 2 long setups. So right here, I was actually out around the VWAP here. So entry was in here, out a little above the VWAP. Now notice here, this was the opening range here, and it broke that level. So you could consider this a 2A breakout here.
I see. Okay.
Okay. So you've got, look at how many setups you have here. And this was within the first half hour of the trading day. You had a 2B here, you had a 3A here, you had a 2A here, and then what did you have right here?
That is the reversal hammer candle, and that is a 1. That is a 1B.
1A. 1A.
1A.
But yeah, you saw it right. You just
Yeah.
it's 1A exactly. So
And
yeah,
hold on. So these are 1 minute. This is a 1 minute candle.
1 minute candles, right?
So that two. Which one is that? It fell into the gap. That big red candle. Is that a 2B?
Yeah, you could have a 2B right here.
Okay.
This one was iffy for me because remember I was saying I like to see 3 to 5 candles. That's why I didn't trade this here.
So,
But technically, this is a 2B.
so that 2B, that would have been 3 minutes into the market open. You would have made a trade.
3 minutes in, you could trade it right here. Yeah.
And that's not my style at all.
Yeah, that's how fast it is. Well, don't say it's not your style. As you work on it, you'll develop your style because you haven't.
Right, but okay, I mean, that's not what I meant. I mean, I think I'm more like you. I want to see a few more candles before I
Right.
decide.
Yeah. Yeah. 3 is a little tough. That's why I didn't take it here.
But for me, if my eye went immediately to that first Greek candle at the 9, I would have
right
bought
here. Perfect. Yeah, that's 3A, 2A, and then 1A here. All very easy. Yeah, we'll ignore this one. I just wanted to show you this as an example of a 2B.
Right.
But 3A, very easy. 2A, very easy. 1A, very easy right there.
So within the first half an hour, you're making what?
That's three trades right there.
It's 3 setups. So that could have been, that's 3 trades. Okay.
3 trades, right.
And what kind of return are you getting? This is like.
This was a big day. I don't remember this trade is from like 2 years ago. So I don't remember exactly what it was, but it was pretty big. Yeah. Because think about what we were getting here. This was at $4.50, and it went all the way to $6.50 and down. I mean, we're talking about 20, 30, 40% moves in a matter of minutes. And we'd be, for a swing trade, we would hold something for a 30% move. We'd be willing to hold for like 6 months, right? And here you're getting it in minutes.
Yeah, it's crazy.
So this was a really big day. LEDs here, LEDs. This is an example of a 1B. You can't really see it here. There was actually a 1A right here.
Sorry, can you maximize that again?
Okay, so there was a 1A here. I didn't take it, but technically it was there.
Right.
There was also, I was focused on the trade that I took, but if I had like spread this out more, you can see there was a 3A here as well, right? See how it pulled into the gap and held the 9?
Right.
So you would have had a 3A. I didn't take that. You would have had a 1B right here. See how it pulled back and then broke the high?
Yeah.
So 3A, 1B, 1A, and then 1B in here and 1B right here. These are the ones that I took. I didn't take these. Right. I mean, again, look at this is a longer time frame, but in half a morning you had 4 or 5 trades, and look at how this thing moved. It went from 4 to 10.
Jesus.
Yeah, this was every once in a while you get these huge movers. Here's an ORB right here. See the range that formed here, and then the break right here, and then it moved from about 14 or 15 something all the way here to around 17.
Yeah.
What do you see on this chart here? Actually, sorry, this shouldn't have been here. This is a daily. This is a daily. Never mind. Okay, let me show you a few more examples. All right, here's some 2As. See the range break right here. And it ran from about 71 to 77.
Right.
Here's a range break here, JNUG. You can see how it ran. UWT, well, it used to be UWTI, now it's UWT, but you see the range break right there.
Yeah.
This was going into
all those ranges look similar in time frame. Are they about like 20 minutes to 15, 20 minutes each?
This one was 5 or 6 minutes. This one was about a half an hour. So the ranges vary. So you can see a break after 5 minutes here, a break after about 30 minutes here. This one was about 30 minutes. This one was about 10 minutes. This is a 2-minute chart.
Can we zoom in and take a look at what the triggers are? The triggers are right when you cross.
The trigger is the cross of the high of the range.
How do you know what the range is? I mean, you draw that line, but like I feel like for me it would be, I wouldn't know how to draw that line there. You just take the high of the range.
You know, I drew this kind of crooked, but really it should be like this.
Straight across.
So you're just taking the highs. Yeah.
Okay.
Yeah.
So
yeah. Some of these they ended up kind of diagonal. They shouldn't be. They should be just straight across.
Okay, so it's basically the high of the range, and when it's the high of the range, it's a trigger to get in.
Exactly. I don't use trends. I use highs.
Okay.
Okay.
And that's not on a candle. That's the top of the tail, or
I tend to use the bodies more than the tails.
Okay. Okay.
Here's the 3A right here. Now this one, they don't always go right to the 9, but you can see the show of strength right in here, and how it popped there from about 35 to 37 or 8.
Why is that a show of strength? Is that because of the large green candle?
Yeah, so this was your kind of signal for the pullback, but the actual entry was the show of strength right here. Okay. You didn't really have strength at this point, right?
Right.
You see that? Yeah, so it's this candle right here.
What does that mean? Is that candle called the doji or something?
That is a doji, yeah.
So why is that? So are those considered weak candles, or like what's the significance of a small candle like that?
Technically, it's indecision, and then you wait for confirmation of whatever the move's going to be. So if this had been a hammer or you know, like a stronger candle, then you could enter on this. But because it's, you know, kind of indecisive, you wait for the confirmation here.
I see. And the confirmation is the big green candle.
The big green one, yeah.
Okay.
Here's Fitbit. This one was more of a kind of classic bullish engulfing right here. And you can see the move. So, you know, they don't, I like the ones that hit the 9, but they don't have to if they're showing strength before that on the pullback. All right, those are some 3As. We've seen one. We've seen, I think, just about all of them. I don't have the 3Bs here, but we've seen everything else. I'll show you one more 1B. So you see these 1Bs can come when the stock is very extended, right? Yeah. So this one had run from, you know, 450 all the way to almost 6, which is huge for a 450 stock. And then here was the break of the high, and then it ran from 6 to 7.
How do you know when to get out?
You know, it's tough when you don't have anything above you. I always start with 2 to 1, and then from there see the price action. When we talk about bid-ask spreads, we'll get into more of, you know, what we're seeing in terms of strength of the momentum. But for now, just focus on the pattern recognition. Okay. So you can start adding this to what you're doing now. So in the mornings, you know, 10 or 15 minutes in the morning, look at what's gapping up. Put them, you know, don't go crazy because you really need to focus right now. So maybe just watch maybe 4 or 5 of them and try to identify the patterns and get your eyes trained to gravitating towards what's moving and identifying these patterns. That's all you're going to do right now. Take snapshots of ones that look interesting to you, and, you know, any ones you have questions on, and we can talk about them next time. How do you scan, if you've done this already, how are you scanning for breakouts in the morning or pre-market movers? I
haven't really scanned. I mean, I haven't used the scanning on Thinkorswim. I'll basically, for our lessons or for what you told me to do, I just found out, you know, what was earnings.
Okay. Yeah. So for swing, it doesn't matter, right? Yeah. But for day trading, you have to, before the market open, know what's moving. Okay. Yeah. So, I mean, I have Interactive Brokers, so on there I run a pre-market scan. Obviously, if you don't have pre-market Interactive Brokers, you can't do that. But I know Thinkorswim has something like that.
Yeah, they do. I mean, I haven't really kind of like really did a deep dive into it. I plan on just doing some kind of tutorial with them in the near future. Okay.
So figure out how to do it on Thinkorswim, and then you'll have the pre-market movers there. You can also go to Stock Market Watch. I don't know if you've been there before.
I don't think so, no.
And they have pre-market movers. So you go to Stock Market Watch, Well, wrong one. I'll just send you the link here. You can just pop this up in the mornings. I put the link in the chat box here.
Okay. Thanks.
And in the morning, they have the top gaining and the top losing pre-market. Okay.
Okay.
And the problem is you don't get all of them. So they only list like 12 or 1, 2, 3. They only list 15 of them. So obviously, like if you see 57 down to 8, so you're not getting like 5 to 8% here. But at least it gives you a starting point. If you don't have any other way to scan, you can look at the ones here, and they have breakdowns as well. And go for the ones that have, if a stock has less than 1,000 on the volume in the morning, don't consider it.
Yeah.
Okay. It should have at least 1,000 pre-market volume.
Right. Okay.
Okay, so that'll give you something to do in the mornings now. Start working on this. When we get together next time, we'll go over what you've been doing and how you're starting to see these patterns. I'm guessing after about a week of it, you'll start to really have it down. And then later on in the future, we can do some live sessions where you watch me trade in the morning.
Right. Okay.
Okay.
Yeah, I do have a question. You said you were starting to get into Thinkorswim yourself.
I haven't really used it much yet, but I'm going to. When I have the time, I'm going to get into it. I do have it now.
I was going to ask about the indicators that you look at in the Thinkorswim software. So there's not, I didn't find anything, but there's not like anything like the T2108 and things like that in Thinkorswim. There's like a whole list of indicators, but I don't know what's relevant and what's not.
Okay, I'll look into that. If you're looking for something that's like T2108, stockcharts.com has they have one of stocks above the 50-day moving average.
Yeah, that's the MMFI, right?
I don't remember. It's been years since I looked at it, but I know they have it.
I've been using that.
Okay, yeah, that's fine. It's similar to what they have in Telechart.
That's what I've been doing, but I mean,
okay.
I'd like to get it in Thinkorswim, so maybe I'll call them. I'll ask them. Just one more other question in regards to your students. Do you have any idea? Can you give me a gauge of where I am in relation to your other students? Am I like at the bottom of the totem pole?
It depends. In terms of understanding and knowledge, you're right there at the top. In terms of practice, you have basically the mental game leaks. So it depends how you're looking at it. In terms of knowledge and knowing what to do, you're right there.
Okay.
That's not an issue at all. And that's a good thing, right? You know what to do and you're not having trouble figuring this stuff out. So at the top there, we're only on our 7th session and you're picking up everything. What I want to hear from you in the beginning, and when I ask you like, what's the market doing? What are you seeing? Is exactly on point. So that's right there. It's the only thing that for you is going to be fixing your mental game, which is probably a little worse than normal.
Mental game as far as like the FOMO and the forcing trade.
FOMO and the risk, we talked about last time, like managing this stuff, right? And still when you took this trade, you went up to 180, which shouldn't have happened.
And that's not even.
I'm hoping. I mean, I'm crossing my fingers that it works out for you and you get a big win out of it. But over time, you can't be doing that.
Okay, that's just. I mean, that's not even mental game. That's lack of understanding. I never even thought. I never was in the mindset to consider my risk before I even went to a trade. So now I'll start to try to get.
Okay, good. So you know that now. You'll correct that, and hopefully, not hopefully, you won't do it again.
But immediately I start to think like, oh shit, it's going to take me forever to try to grow my account that way. That's a mental game.
Yeah, that is mental game. Yeah, it is going to take longer, but it's going to take longer, but you're going to protect your account because if you increase the risk, the chances of blowing up your account are very high.
Right. Okay.
Unless you just knock a few out of the park and you get this big run, but the chances of that happening are slim.
Okay. As it stands today, where do you? What is your opinion on where the market is heading? Do you think we're going to revisit February lows?
I do. So I have a plan B. We always have a plan B, right? But my bias is, like, I would say I'm slightly bearish right now.
Mm-hmm.
And I do think we're going to test the April or February lows. And from there, I think we could even get a bigger move down. But we'll see how we react to those levels. But I am being cautious at this point. Like, you don't see me betting the farm or anything. At this point, I just have the NVIDIA trade and TZA. The index, one index short, one stock.
Right. Okay.
All right. When do you want to do our next session?
I was gonna say let's just go ahead and do it in January.
January. Okay. So you want the holidays here. During this period, start watching the Open as much as you can. Actively doing this. If you have any questions, just shoot me a message in the chat. I'm sure you're going to. Take a lot of annotations. You can even record your sessions of what you're watching.
Yeah.
And we can go over them. So let's do this. I don't know exactly, and you probably don't either, exactly what your schedule is that first week of January. But
before that, so I mean, it used to be that Tuesdays and Thursdays work best for me, but it seems like it doesn't work well for you because if you want to be trading during that time, I totally get it. Would you want to start doing Saturdays and Sundays?
We could do Saturdays or Sundays, or I don't know if this time works for you, but at market close is really good because trading is over by then.
That does not work well for me.
That doesn't? Okay.
No, right when I gotta pick up my son.
Okay.
And yeah.
And what about an hour or two before the close?
Yeah, that's actually pretty good.
Okay. Yeah, I'm almost always done by that time. So
okay.
If not in the morning, we can just do later. Not at the close because you're going to be gone, but maybe like 3 your time.
Right now would be good. It's 2 o'clock my time, and the market closes in a couple of hours.
Yeah, that works. That's a good time.
So if we run over a little bit, that way, I could still. I got to be there at 4 to pick them up, and it's very close. So 2 o'clock would be good. 2 o'clock on Tuesdays and Thursdays. How's that?
Yeah, that's good.
Okay, so do you want to schedule it now, or do you want to?
Out to there, I don't know exactly what my schedule is. Let's put in for sure. Let's put in the 8th, and then we'll see. The 1st through 4th, what our schedules are.
Okay.
So
I'm fine with the 8th. But it'll give me a lot of time to just go over a lot of stuff on my own.
So let's do the 8th at that's 11 my time.
Yeah.
That's 2 your time, right?
Yeah.
Okay, so we have that one down. Let's actually do the next, just so we have it kind of in place. We'll do the 8th, the 15th, and the 22nd.
Okay.
It's basically every Tuesday, 11 o'clock, 2 o'clock. And if we decide one of these we want to do a live session, we can work in a live session as well. At that point, we'll see where you are on your pattern recognition of these things, which I'm sure by that time will be good.
And this is the day trading you're talking about.
Day trading, right.
Okay.
All right,
Paul.
All right. Yeah, so it's going to be a while here. In the meantime, anytime you have issues, just shoot me a message. If you want to, you decide in a week or two that you want to get together earlier than that, just let me know, and we'll get together. Okay. All right. Otherwise, have a happy holidays, New Year.
Yeah, same to you. Happy holidays to you and your family. And Happy New Year. And we'll talk soon.
All right, man. Talk to you later.
Take care.
Bye.